Acura's all-new ADX, a compact SUV that isn't just built for one thing. It's precision crafted for everything. To escape the grind with available all-wheel drive. To go with your flow with available Google built-in.
Hey Google, turn it up.
Okay, turning up the volume. And crafted to be heard with an available Bang & Olufsen premium sound system. The all-new Acura ADX, crafted to match your energy. Acura, precision crafted performance.
Take your vibes and go, 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 go.
Google is a trademark of Google LLC.
Reality radio for a really great future. We're talking real money.
Every time we do this, I feel a little like Schrodinger's cat. Have you met Schrodinger's cat?
I have not.
It's a paradox behind quantum physics. Schrodinger's cat
That's
theorem.
probably why I have not met.
Schrodinger's cat. The paradox is that according to quantum physics, you put Schrodinger's cat in a box, and then there's another cat in the box. Well, there's another box, identical box somewhere else in the world or in the universe, and depending on which box you're looking at the time, that's the box the cat's in. It's like the cat's in two places at the same time.
That's deep. It's too deep for me, so I'm going to let you take it.
I mean, I was just on one station,
That's
and
true.
then I'm on another,
That's
and
true.
I don't know how that... And it happened just like that, like twinkling of an eye.
Yeah.
Hello, everyone. All of our KVI and podcast listeners out there across the fruited plain. This is Talking Real Money, the show devoted to talking about real money on the weekend.
And the show is devoted to you, your calls, your needs, your questions you want answered. That's why we're here. It's not about us.
Yeah. And we have a phone number that makes that easy to do, not just during the course of the program either. You, of course, can call us during the program.
We
at
would prefer it.
855-935-TALK, 855-935-8255. But you can also just call that number 24 hours a day, 7 days a week. And if you do that, and ask a question, we will answer that question during the podcasts that air the following week. So you call that number and then go check out the podcasts at talkingrealmoney.com or at Apple Podcast or iHeart or any of those popular podcast services, and we will help you out at 855-935-TALK, 855-935-8255.
And in the last few hours, we answered questions on everything for setting up accounts for a son, for an unfortunate rollover of a retirement plan into an expensive annuity.
Oh, that was so sad.
To somebody paying 1.8% management fee, in addition
was sad too.
In addition to high expense actively managed funds, in addition to back-end loads on that. You got to like that one. We also had somebody calling and asking about setting up a Roth for a young person, someone who was gifted some Vanguard funds. That was a very positive call.
Okay, those were the good calls.
Yeah, and then we also had a slight disagreement with someone about blockchain, or perhaps better known as Bitcoin.
We didn't argue about I don't argue about blockchain.
No,
the technology itself makes sense.
Yeah.
It's just the stupid coins that they've invented using that technology. And I'm going to say that universally. I think, except for that 11-year-old kid's quarters.
No, what about the Escobars, the diet Bitcoin?
Diet Bitcoin.
So when they used to say silver or lead, does that play into the... No, that doesn't play into this Bitcoin thing, I guess. So
same fake money, less filling.
I see. They're really good at these industries where the inventory is relatively small and the demand is relatively high. Let's put it that way. They've been very successful as a family.
They're very good at things that aren't exactly on the up and up.
Yeah, maybe. But he does know where the Bitcoin is buried. That you can count on.
8-5. Yeah. Did you watch Narcos?
Of course. I think I watched that all over one weekend or something.
Yeah, me too.
I love
it
that
was so
show.
good. And they buried, and plus it was really good I was working on my Spanish.
Oh,
so
perfect for that.
It was really helpful because they got the subtitle.
About 4 words they said over and over again.
They buried billions of dollars in the woods.
That's just shocking. But I guess they just ran out of places to put it, right? Had so many dollars, they didn't know what to do anyway. So
they couldn't launder enough dollars.
I know.
And now that's why you need Diet Bitcoin.
Yes.
If you're having trouble, wait, I got another sales pitch.
Stand by, go for it. Yeah, go ahead.
If you're having trouble laundering your drug money, we have the answer. Diet Bitcoin.
Feeling a bit overstuffed with those dollars? It's Diet Bitcoin.
Diet Bitcoin.
The same, less filling, but the same great taste.
I just realized that I only have one more show.
I wasn't going to bring that up today because I didn't want to see you all weepy about the fact that you have to go on a long vacation and not be able to do the show.
Before I go on vacation.
Okay, now we're going to I can hear it in your voice. You okay?
Yeah, I'm okay.
I could tell. You're going on a nice trip. Just relax.
I'm getting a little, actually, no, the reason I'm getting a little weepy, is because I worked really hard last year to become Delta Diamond.
Yeah?
I did too. I worked really hard to become Delta Diamond.
You went on some trip that lasted like 14 straight hours or something.
I did. It was ridiculous. I worked really hard.
Yeah.
And I have the Delta Global Upgrade certificates that you get when you're Diamond.
Yeah.
And I have applied them to my trip to New Zealand, and I want so badly to be upgraded to Delta 1.
I don't know what that means. Oh, okay. We stretch out because it's a long flight.
It's a 15-hour flight. It's almost like London to
whatever it is. Yeah,
whatever it was they just did.
Yeah.
And there are 8 seats left in first class in Delta 1, and I haven't cleared yet. I'm just bummed.
Wait, I don't understand. So they haven't finalized your application?
No, I have a seat. I have 2 seats.
Yeah.
Debbie and I have seats in Delta Comfort. But we've put in for an upgrade to Delta 1 based on those certificates.
But they have to wait to see if anybody buys them?
Well, no, here's how it works. What they do is they have people there who are, I think they actually sit around the office with their fingers crossed.
Please.
Come on.
It's a 15-hour flight. I'm crossing everything,
They're going, we're hoping to sell these $4,000 tickets.
Of course.
Come on.
Yeah.
So I'm going to ask all of you, if you're thinking about flying from L.A. to Sydney a weekend on the 11th of April, take another flight, darn it.
So if they don't sell those seats, you're in line. You don't know where you are in line, though.
Well, I think because I have Global Upgrade and I'm Diamond and I'm Delta Reserve, I believe I'm probably like number 1 or 2 in line.
Okay. Well, we will.
Front of the line. So I am just hoping those last 8 seats, because that's a long flight.
Oh, man, that is. Honestly, my heart of hearts, I don't know. I'd have to take like Ambien or something. I couldn't sit there that long.
Oh, I'm thinking the same thing. I'm calling the doctor next week.
I would have to. Ooh, that's
I'm
a
calling
long
the doctor
way.
next week. Oh, but you know what's cool is that because Virgin Australia messed up my flight coming back, I'm flying Emirates.
That's supposed to be nice.
From Christchurch to Sydney. On an A380.
Really? You and 800 of your closest friends.
Exactly.
Or whatever it is. I still can't believe they can put that many people on a plane unless they're transporting them to war or something. It's crazy.
I think Emirates, it's only like 600 people.
Oh, God. Just how long does it take to get everybody off and on?
I don't know. It's a big plane.
That is huge, yeah. Yeah.
And it's a full 2 stories. Not like the old 747 where it's like
part of it.
a plane with like a tumor.
That was
on
it.
Top.
Yeah, no, this is 2 stories the whole way.
Yeah.
And you want to be on the top story from what I understand.
I have to tell you, I'm really excited because Emirates service
supposed to be second to none. Yeah, I agree.
The charts
I agree.
Good.
Yeah.
So I'm really thrilled about
we're happy that you're making the trip. Don works very hard. You hear his voice rarely. We never see him in the office.
No.
That's by intent. But he's working all the time.
No, they don't.
That's a whole other. We don't have time on this show for all that. So, anyway, we hope it's a great time. And yes, I will hope that you get the upgrade you deserve.
Let's see. After that show, the week after, it's going to be you and Paul Merriman.
Yeah,
then, right?
Paul. No, actually, the week of I think the first one's the 14th.
Mm-hmm.
Yeah, I'm Larry Swedrow is going to come on for a bit, and then I've got an attorney who does a lot of securities work. He's going to come on for a bit.
But over here, you're going to have a best of, aren't you?
On KVI, we'll do the best of on the 14th. And then the 21st and 28th, Paul Merriman and I will do the full 3 hours, assuming he can stand up and take it for 3 hours.
I may just not come back. I may just New Zealand much. I'm just going to stay.
Who could blame you? Who could blame you?
I don't know. I want to give you the number again, 855-935-TALK, 855-935-8255. By the way, just once again, We want to talk about the volatility in the stock market.
No, we don't.
Because we do. We have to.
Okay.
We just want to mention it. We want to address it because it is the elephant in the room.
By the way, of all the calls we just got on Como, not one person asked us about that.
Yeah, but I know they're thinking about it.
Okay. Because
I know.
Because a globally diversified stock portfolio did lose 1.3% during the last 3 months. That's
nothing.
I know, but you're the one who raised it. I think that's nothing. If you had
no, but the reason I bring it up is because people look at things like the Dow 30 and they see 5% losses
but not in the quarter. It was 1.5 for the quarter.
The Dow was 1.5?
No, pardon me. The Dow was 2.5, I believe, for the quarter. Yeah, 2.5 for the quarter.
You're Mr. Numbers Guy. You've taken over the role, by the way, in the show of Paul Merriman. Playing Paul Merriman today will be Tom Cox.
But emerging small cap value did make 2.5% during that time, Don. So you got that going for you. But REITs, they lost 4.5%.
Paul doesn't know we do a show on KVI, so he's not listening to you making fun of him.
I'm not making fun of him. I'm kind of kindly mocking him. I don't know.
Kindly mocking.
I don't know. You notice I don't make fun of the Escobars because, they have kind of a long reach. I'm not going there. I'll let you do that. So good luck.
I do that.
Okay.
I take that on because I'm hard to find.
It's true. You are.
I'm really hard to find. Good luck finding me. I hide. I'm hiding. That's why I'm not in Seattle. I just hide out.
Cellar somewhere.
855-935-TALKS, the number. 855-935-8255.
Okay, so you want to mention volatility. So if most people have a typical portfolio, typical is 60% in stocks, 40% in bonds, that portfolio lost a shocking 0.8% during the previous quarter. Come on. Really? Did that really worry you? I mean, there were days it looked bad, right? It went way up. In January, it went way down. In February, then it came way back up again and went back down. It kind of...
Yeah, and that's called volatility.
That's what's supposed to happen.
And that's why we suggest you build portfolios that take into account volatility. That's for example, the 60-40 or the 70-30 or the 50-50 portfolios. Take into account your ability to handle that volatility. They mean, though, this is really what I want to get, the main point I want to get to. If you are diversified, there is no way short of an asteroid strike or a Chinese space station. No, even that won't do it.
Yeah.
Which won't do it. There's no way you can lose all your money. If you're not playing with the market, you can't lose all your money. This is not like Bitcoin, folks.
I was going to say Valiant, but okay.
Valiant Pharmaceuticals or Bitcoin.
Mm-hmm.
Bitcoin went from $19,000 to $7,000.
Individual stocks do provide that opportunity to lose all your money.
They do.
That's why we don't recommend you own them.
If you look at your 401k or you're looking at your investment accounts and you see individual stocks in there, that is a clarion call for you to start working on a plan to sell those stocks. And I don't care what the market's doing. I would tell you to do that if the market was up, down, sideways, volatile, non-volatile, doesn't matter. You need to be out of those individual stocks and you need to be diversified. That's the only way this is going to work. 855-935-TALK is our number. That's 855-935-8255. You need a little help dealing with money? We're right here for you all the time. 24 hours a day, 7 days a week. 855-935-8255.
Tom and Don are talking real money.
In addition to the Talking Real Money podcast, I also do another podcast that's very popular over at Apple Podcasts. It's called Money 30. Every day I try to educate and inform you about money in a brief 2 to 4 minute podcast. So check them out at Apple Podcasts or all the other podcast services or at money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hello again. Welcome back. 855-935-TALK is our phone number. 855-935-8255. We are talking about your life and your money and how you can make more money by doing these things right. Managing your money right, understanding how investing works, and also, of course, paying no attention to a guy who writes books and predicts stuff all the time.
Oh, let me guess, please.
Yes?
Mr.
Yes,
Potato Chip guy, Harry Dent.
Potato chips?
That was his theory, like around 1999. You follow the sale of potato chips, and when they're going up, things look great. But as we all start to get older, we buy fewer because we realize that's not the best thing to eat. High-fat potato. That was one of his big things. It was like 1999, I want to say. But anyway, yeah. So
yeah. You're absolutely right.
I heard him speak.
As a matter of fact, Harry, back in 1994, predicted a huge economic boom, and that was where he made a name for himself.
Right.
Was with the book The Great Boom Ahead.
That's right.
But later on, he followed that up in January of 2009. Now, what happened in February of 2009, Tom?
I think the market bottomed out, right? February or
and
March.
It started doing what?
Going up.
Like mad.
Yeah,
and it's been going up pretty much ever since.
Indeed.
Well, right about the bottom of the market, Harry came out with a huge best-selling new book called The Great Depression Ahead, How to Prosper in the Crash. That didn't happen.
Now what's he selling?
Harry has since had a number of those books about depressions and crashes, and what was funny, he wrote a book in 1999 called The Roaring 2000s.
That's right.
What did they call the 2000s?
The Lost Decade.
Yeah, that one didn't work out so well.
By the way, for me,
either.
the 70s and 80s were more the lost decades, not the 2000s. But that's another matter.
That was for totally different reasons. You had no money then.
Well, that's true as well, of course.
Well,
I wasn't a rich stockbroker the way you were in the 80s. No, that's for sure.
I don't know how that happened.
Okay.
Harry publishes and I got to do air quotes here.
Yes.
Newsletter.
How much?
Online newsletter called, no, it's free. It's Economic and Markets Daily. It's in the upper right-hand corner. It calls itself advertorial.
Yeah.
It's a serious advertorial. It's not an editorial. Advertorial. He's now predicting a crash in gold. He's never gone there before. This is new. This is Harry. Harry will just keep predicting things until he gets something right. So he's seen gold going down recently, and he's saying that by mid-2018, I want you all to mark this down on your calendar. Today we told you that gold is going to be in the $700 per ounce range by mid-2018. How can he do this? Because he can say anything he wants. It's a free world. He can speak, say whatever he wants. So he's predicting gold is going to go down, and he tells you to buy. What is he telling you to buy?
Yeah. Where do you move the money as the alternative?
I don't know, because I have to watch a video. Millions of investors will soon be devastated. This must be the name of a new book. Safe Asset Slaughter. Ooh.
And it's all for him. It's been all about the demographics. That's why I mentioned the potato chips, because as we get older, then we're going to be consuming less. As we get older, we're going to need the money that we've invested. There's all kinds of predictions that say that will push stock prices down, but there's nobody who can predict what direction stock prices are going to go.
Harry keeps predicting it. Oh, his latest book, I just found it. It's 0 Hour. 0 Hour, and whatever he's pitching in it that I haven't read, I guess I'm going to have to now that I did this.
Well, you got 15-hour flight to land down under.
Australia. Yeah. It's called 0 Hour. He claims that whatever this is, it will create more millionaires than Bitcoin, legalized pot, or penny stocks ever could.
I thought he was going to say combined. Come on.
I don't know. Proven strategy, wealth faster than you ever imagined.
Yeah.
These are the kind of things, this is the epitome of what is wrong with financial advice in America. All of these people are pitching all of these systems. AAII does it. The American Association of Individual Investors, a group that has investors in their name, pitches a stock speculative newsletter. This is the deal. They pitch these newsletters, these books, these things, and none of them can do anything like what they claim, but you want so badly to have someone tell you what to do and tell you what the future will bring that you're willing to blow your money on this stupidity.
That's it? That's all you got?
I wanted to share the Harry Dent story. I love sharing
Okay, so
Harry
make
Dent
sure I'm
story.
clear on this. He has a new book.
Right.
Okay. And he's again predicting the end of the market or whatever, major decline.
Well, no, the end of the safe.
Oh,
safe
I see. Okay, so
assets now.
gold, silver.
Like gold, silver. I don't know
what
if,
else is
if
safe?
bonds are in there. He is actually, I just read a little further. Oh, yes, he doesn't believe that cryptocurrencies are a fraud. Maybe that's it. Yes, he's pushing cryptos.
So you take all your money out of gold and run right over and put it in cryptos.
Yes,
Okay.
that's what it is. He's pushing cryptos. Nice, Harry. It's just whatever way the wind blows, that's the way Harry blows.
Yeah, it's frustrating because I think, here's what happens generally that we see. Somebody like Harry comes along, makes a prediction. There's the guy in Montana, too. I forget his name. He always has a new prediction. Jim somebody. But anyway, they have predictions. You hear them, and you hear them enough, and there's something that happens in the news that makes it, aha, see? That's just he was right, that's what's going to happen, and then you react to that. You either move your portfolio from stocks to bonds. You buy gold. You do whatever thing feels good at that moment. And then that does not perform up to what you believe, and then you make another move. This is what people have this tendency to chase ideas. They have a portfolio full of ideas instead of diversified stocks and bonds, and not trying to be predictive of what the next 6 months or 6 years will bring.
Jim Stack.
That's it. Yeah.
That's who you're talking about. Yeah, Jim Stack's latest prediction. And he manages $1.3 billion for people, even though he's made lots of bad predictions. In January, he said we're in another housing bubble.
Well, Sam Zell, Equity Group investment founder, told us
look,
in the
it started
program
playing.
earlier that when you
I
talk
hate
about
it when websites start playing.
Well, Sam Zell got a quick pitch in there. That was good.
That's Bloomberg. Bloomberg, I hate it that your website starts playing when I'm reading something. Stop it.
Annoying. So, yeah, so we're in a housing bubble.
We're in a housing bubble.
Okay. All right. Well, he may be right, by the way. I don't know.
The only place in the country where I can see the possibility of a housing bubble is the Seattle area.
Well, anytime what if we led the country 3 years in a row? Month by month, 3 years in a row.
Tell somebody in Overland Park, Kansas, there's a housing bubble, or Wichita, or
Valparaiso,
St. Louis.
Indiana.
They're going to go.
Yeah, right.
Yeah.
Prices have gone up. Let me see. It
went up in 20 years.
Yeah, went up 1.7% last year. Really went crazy. No, not going to happen.
There's no.
But here, I would concur. And here's another mistake I see people make along the way here, because I have friends. Sadly, people that I really like.
Friends?
I know there's a couple. I think it's a forced friendship because their child likes my child. But the point is this: they want to, for example, cash out some of their retirement savings and pay the tax and pay the penalty so that they can buy a house. Because they see everybody else owning a house and watching the prices go up, and I keep saying, you can't buy that. That already happened. The next segment may be straight down. We don't know. This is one of the things we have talked a lot about on this program is housing should be a lifestyle decision. Housing should be something that you can afford in your lifestyle, and it should be where you want to live, and it works for work and all those things. It shouldn't be, I'm going to buy a house so I can get rich like everybody else has over the last 8 years. That's what it should not be.
As a matter of fact, the numbers are against buying a house.
I know.
They're just totally against it. We are creatures of our immediacy, of whatever surrounds us.
Recency. Bias, yeah.
We as baby boomers upped the demand, that demographic shift that Harry Dent talked about, the increase in the potato chip sales. We increased the demand for houses. Therefore, we caused the price to go up. Therefore, the oldest of the baby boomers, the ones older than us, were able to some extent to profit from this, but the reality is most people are not going to make money after inflation with a house. And the numbers bear that out going back. And we're big believers in the more data, the better data. Going back over 100 years, the data says you make about 0.3% a year over inflation.
Well, and the only reason I'm laughing is because I had lunch with my brother for his birthday the other day, and he's done well for himself, has a very expensive house in a high-demand area of Seattle, and he said, and it's going to go up another 40% over the next 5 years. I said, well, how would you know that? Because there's a big company moving in close and all these. I said, I'm going to stop you there. There is absolutely no idea. And in fact, if you really look at the numbers, I would suggest it's going to go down, because anytime something gets parabolic the way it's been here, things tend to go the other direction. That's just people, what's happened.
Companies can move into an area, and they can also move out of an area. And they've kind of been known to do that.
Well, and there's a well-known local company that has decided to put a lot of people in another place because they're having trouble getting all the office space they need here.
Wichita?
Rather large. They haven't decided yet. It's you know who I'm talking about. Amazon.
I know who you're talking about. I know who you're talking about. Well, another big Seattle
Wichita,
company. Another
Carolina,
big Seattle company. Years ago said, we cannot afford to build planes, all of our planes in Seattle. It's just too expensive. Mm-hmm. And because it's a pricey place to live.
The
Seattle area is a pricey place to live.
It is,
So they said, gee, look at Charleston. What a lovely community.
I saw somebody paying $60 the other night for parking before the Mariner game. $60. $60. Yeah. Huh.
I thought Disney was high at $22.
That's crazy. $60. Yep.
That's insane. 855-935-TALK is the number. Give us a call. We'd love to talk to you.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK, 855-935-8255. The other day, MarketWatch, you've heard of them, published a list of the 8 most popular money and investing books ever.
Ever?
Wow,
let me see if I can even name one.
Yeah, I bet you can name one. I've got the 8 sitting right here in front of me. I've read 1, 2...
Really?
1, 2, 3. I've read 3 of them. 3 of the 8.
Is Bogle one of them?
I won't read some of the other ones. Bogle's Little Book of Common Sense Investing? Bing, 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 bing.
I read that. That's like a decade old, maybe 12, 13 years?
Yeah, it's about
like
10. Okay. Yeah, let's see how they reviewed it. Hold on a minute. We'll start right there. Little Book of Common Sense
Investing. It's not my favorite book by him, by the way. Don't count on it. It's my favorite.
MarketWatch's editors gave it 3 stars.
Oh,
they said
of
it
course.
was... Yeah, because they're all market timers. All right, let's see if you can get another one.
Wow.
I bet you can. Ooh. There's a very, very popular one, very popular with people. I'm going to give you a big hint. People like Warren Buffett.
I've never read any of his stuff.
Benjamin Graham?
I never read, and I know they republished it a few years ago, but I did not read
Intelligent Investor.
I did not read that either.
Yeah, Intelligent Investor by Benjamin Graham.
Because they did the update. They did the update like 4 or 5 years ago, right?
Yes, with a forward by
Warren Buffett.
No, Jason Zweig.
Jason Zweig, of course, yeah. Whose work we greatly respect and think you should read weekly in the Wall Street Journal, except this week when apparently he's out on the egg roll. So.
Now the Intelligent Investor is actually a pretty good book on value investing. Mm-hmm. It's buying undervalued assets, but it's not a way that we would suggest any individuals invest.
Well, this is because you got to go pick the stocks, right? You got to pick which companies are undervalued. We think that you use a mathematical equation developed by Nobel Prize-winning academics instead to own thousands of undervalued companies. and hold those for long periods of time. So there's no trading, there's no picking of stocks, and there's no sort of securities analyzation. I'll put it that way.
Or securities analysis.
Pardon me.
That's okay. It could be analyzation. I didn't even know that was a word.
It's been a long 2.5 hours. What can you say?
It really has. Okay. All right.
Yeah.
I'm gonna give you a hint on another one.
Oh boy. I could just go to the article and look at it myself.
No. It's more fun this way. Oh gosh.
Idiot's Guide to Mutual Fund Investing?
No. Jason Zweig loves this book too.
Well, I love Your Money and Your Brain, but I know that's not one of the most popular books of all time. I don't.
Your money or your life is one of them.
Yeah,
I've never even heard. Vicky
I've heard of it. Yeah, I know it, but I've never read it.
And they say it's just really basically dumb.
Yeah.
Random Walk Down Wall Street.
Oh, of course, Burton Malkiel. Yeah, that makes sense. Yeah,
that's a terrific book.
Yeah, that is a great book.
Then there's one, I Will Teach You to Be Rich, which is just stupid. It's a 6-week program to get rich. It's one of those self-help, cheery-on, rah-rah books by Ramit Sethi.
Why are you so down on the rah-rah thing? Come on.
I hate it. I hate inspirational, motivational garbage.
Oh.
You know, it's all platitudes.
Well, it's generally kind of common sense. I mean, if you get up early every morning, go to work. Okay, go to work. Check that box. That's a good one. Okay.
And that's like the other one. The other big popular book of that kind is The Millionaire Next Door.
Which is a very good book, by the way.
It is? Really?
Because I think here's what I see.
Below your means.
But here's what I see. A lot of people do that for a time, and then they get into a job that pays them, in today's world, $250,000, just for sake of argument. Mm-hmm. They allow their spending to ratchet up with that to the point where they're not saving, where they are outspending what they take in, and I do see this regularly.
All right,
people come in our office, so there's some value there. The lessons to argue. I don't like. I think in the book they do talk about paying off your mortgage early, which generally is not a good financial decision.
Right.
But
and then this is a very popular. This is a very popular book.
Yeah,
Boglehead's Guide to Investing.
Yeah, that's a good one.
That's actually a pretty good book. That got pretty good reviews across the board. And finally, I've gone to the 8th, written by the most popular money host on radio,
Jim Cramer, on radio.
On radio.
Wow, I should know this.
Yes, he's a Southerner. He's a Southerner. He's got a bit of an accent.
The other Jim.
No, Dave Ramsey.
Dave Ramsey, of course.
Damn, Dave Ramsey.
Damn, I'm going to get in a lot of trouble for that one.
It's The Total Money Makeover by Dave Ramsey.
Again, which is, kind of the common sense stuff. Get out of debt.
Get out of debt.
Yeah.
Then, here's the Dave Ramsey problem.
Yeah, he's got one.
He's good right up to get out of debt.
Yeah.
Then he crosses the line into utter stupidity when he starts telling you to invest with his people, which, by the way, they used to be called, what were they called?
They had to change all this due to regulatory concerns, I believe.
Oh, yeah, you think he was going to be in trouble with the SEC.
So he was handing people like you off to him, and then they were selling you products, and he was getting part of the deal.
Right.
Yeah.
He through his endorsed local provider network.
Endorsed local ELPs,
for stockbrokers would sign up with him, and then he would basically get a piece of the action. He'd get paid for every client he sent them, which, according to the Securities and Exchange Commission, puts him in the relationship of a solicitor.
Yeah, you got to be licensed.
He would have had to register as an investment advisor, which I can guarantee you Dave doesn't want to do that.
Yep.
Because it would require that he actually act in people's best interest, and that would mean that he would have to stop. Dave loves loaded mutual funds.
Yeah, doesn't he still have a fund where he tells people he's made like 14% a year for some long period of time?
He swears.
I'd love to know what fund that is.
If you own a growth fund, a growth and income fund, and that's it, you will make 12% per year.
What years?
He says, no, that's just the long term. That's the long
come
term.
On.
You'd make 12% per year. You'd make 12%.
Okay.
And you're going to, of course, get a stockbroker who has the heart of a teacher. The heart of a teacher. The heart of a commissioned salesperson is what they have, Dave. The heart of a used car dealer,
he did
Dave.
switch that, but I don't know what he switched it to. I mean, I don't know the relationship today because I know he had to make the change.
No, now the ELP program, oh my gosh, people hate it because the brokers hate it because it's now called the, oh gosh.
Don't they have to pay a big fee just to be part of it now?
Smart Vestor. Right. Now they just pay a fee to be a part of it, and you just become one of the many smart vestors out there. And they hate that. The reviews of this by the stockbrokers have been horrible. They say, well, I'm paying you a lot of money and I'm not getting any clients. That's the way it works. If Dave's not getting a kickback. So Dave's investing advice stinks. So basically, here's the thing, and I have done a lot of research on investing books. They're hard to come by.
Well, no, they're not hard. There are a lot of them.
But a good one is hard.
No, that's
to
a
come
different
by.
matter. A different matter, yeah.
Yeah, it's either.
Okay, well, you give us your top 5.
I don't have any.
Oh, come on. You've got your book.
Well, but mine is not as good as I'd like it to be. I have to rewrite it.
And we will have a new one out by the end of the year.
Yeah, we will.
We've committed to doing
it. And I hope that this one will be better than financial physics.
I think it will.
I think it will be.
And I tell you what, and you're going to laugh.
What?
I still like Live It Up Without Outliving Your Money.
I do. I agree.
It's got enough in there on the detail of asset allocation, that kind of. Then that's by Paul Merriman. I don't think it's in print anymore, but maybe you can get a copy of it somewhere.
I do like the smartest investment book you'll ever read.
That Dan Solon?
Dan Solon, smartest investment book and the smartest portfolio you'll ever own. Those are both very, very good books that are easy reads.
Yeah.
Really do put things in. Dan is a very good writer. I think Dan's a very good writer. Larry Swedroe, I used to like Larry's books.
I'm reading his new one now, and he
gets too technical.
Yeah, and we're back into a lot of the things that I struggle with, a little bit of alternative investments and lending programs and all kinds of stuff that are problematic, so that I worry about. So anyway, I mean, but Larry's writing is very good, and he's written 9 books, I believe. So it's worth paying attention to.
Oh yeah, no, absolutely. So those are good. Okay, do you have any others?
You know, I was. Again, it depends on the audience. I mean, it depends on what you're after.
No, I'm just talking about investing books. Just great investing books, no matter what the audience. Truly great.
Read a lot of
books.
them. When I had the TV show, I'd read 20 a year because all those people would come through and give you their book.
They send them to you.
Yeah, so you read them. That is really hard. I think Christine Benz wrote a pretty good basic book. I can't remember the name of it now.
I'm going to have to look that one up now.
And then who was the other? Because I interviewed her. I'd have to dig a little bit.
30-minute money solutions?
Yeah, it's pretty easy and it's pretty. I just like it straightforward. Now again, when you get into the details, sometimes on her portfolios. Don't like her portfolios because she has some active management stuff in there. But again, the book itself.
But you have to consider the source in this case, though, because she's with Morningstar.
Correct.
And Morningstar still, even though they're getting it, and they've done multiple studies where they show that active doesn't work, they still make so much money off of active fund managers that they have a very difficult time focusing.
Separating.
Yeah, separating the wheat from the chaff, as it were.
So I liked her book.
That's the case with a lot of people. You ask an editor ask Jason Zweig at the Wall Street Journal.
I guess I mentioned that book. I love that book because I think it really tells the story about you can think you're the smartest person in the world and you could have great advice from people, but your brain is working against you all the time. And you got to figure out a way to fight that off. The book tells the story. Neuroscience. I love that book.
Yeah, here's the problem, though, is that even if people read it, they're not going to see themselves in it because we have this nasty tendency, which is, by the way, in the book, to believe we are not an average person, that we are the ones who are above average and are therefore far better able to control our emotions and make intelligent decisions
above
than all
average,
those other
what is
people.
It? Above average drivers, above average lovers, above average investors. It's all right there, yeah.
Oh, yeah, no, and no, that's definitely me. I mean,
it goes without saying. Come on.
I'm all of those things.
Yeah, right. So anyway, it's Yeah. No, I like that one because I think it's honest. I think that it gets into the minds of people in a way that most of the books don't. They're just designed to sort of throw the stuff out there and you got to figure it out. I like that.
Yeah, me too. I want to give you the number again in case you want to sneak in. 855-935-TALK is our number. 855-935-8255. Give me a call. Give Tom a call. Give us a call. And if you can't call during the show and the spirit moves you to call later, call that number anytime, 855-935-TALK. And then we'll answer those questions during our podcast that I post during the course of the week. So check it out.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
Your guides to a really great financial future. Tom and Don are talking real money.
Boy, and I checked, those tickets are going fast. We are down to 40 seats left for Retire Meet North in Everett on May 5th. So I don't want you to be left out at the end. This is what happens is people call us, and this happens, it happens every time we do a Retire Meet. People call like in the last 2 weeks when we've sold out and they go, can I still get some tickets? And we go, no, it's sold out. So don't get left out. Get your tickets right now. Go to retiremeet.com, retiremeet.com. And Paul Merriman's going to be at this one.
Yeah, Paul's excited to join us for this. I mean, this is first time we've been in the sort of North Puget Sound area. Most of the time we've done we did Bellevue and we did Tacoma. So your chance to visit with us if you live, Mount Vernon, Marysville, Everett, all those places would be much more
Canada.
Canada.
You can come down from Canada.
Not easily, but you can come down from Canada. So yeah.
Yeah. Well, it's close. Everett's closer than Bellevue.
Yeah. You're well done on your geography.
Thank you. I pride myself on my ability to read a fine map.
Well, you have a connection to maps, that's for sure.
Since I was in the map business for a very long time.
I was going to let you go there, not me. So
I like the eclectic nature of my background.
I like the maps. I mean, I've got a couple of them in my house. I finally took the one that you gave me that had been hanging downstairs in my wife's office. She was gone the other day. I finally took that one.
You had the guts to take it out?
I took it, and here's what and you know what I replaced it with?
A fake version.
No, that would have been a good idea. No, she got me for Christmas a picture I still don't understand. It's like 3 feet by 2 feet of a picture of me on television 15 years ago. She got me that, and I tried to give it to her. I tried to give it to my stepdaughter. She tried to break it. I tried to give it to other people, and they're like, "What? That's weird." So I took the map that you gave me, which I love because it's like early Seattle or something. Or no, it's the Washington map, Washington, Oregon Territory.
That is an original map.
It's very cool.
From 1862, hand colored.
Yeah, I love it.
Of the Oregon Territory.
Yeah, Oregon Territory. So I took that and I put the picture that she gave me of me up in place of it. Now, she has not been downstairs, I don't think, to see it yet. So I have not incurred the wrath as of yet.
Where did you put your old map?
I hid it away. I think I'm going to take it to the office because I love that map. So.
Oh, yeah, that'd look good in the office.
That would.
Look in the office.
I love that map. So, the map business is an interesting one.
And this has nothing to do with money, but who cares?
Oh, of course it does. Everything, as you said, at one point
something to do with money.
Right.
I was just going through as an exercise because I'm getting old.
Yeah,
and I as an exercise, I wanted to see everything that I did, all of the jobs, for which I have gotten paid in my life.
Okay,
I actually wrote them down.
I think I have a pretty eclectic list too. By the way,
I've been. Yeah. In chronological order, let's see if I can remember well, because I don't have the list here.
Mm-hmm.
In chronological order, I have been a lawnmower, a snow shoveler. I got paid for both of those.
That's last year.
Paperboy. Yeah, this was the year before last. Yeah, okay. When they still had papers.
Exactly.
Paperboy, busboy, busboy, Too many. Anyway,
okay. My first job was more unusual. I was a door-to-door Holly salesman.
That's right.
Holly Jolly Company. Yep.
And that made me remember one that I forgot to put on my list when I was in third grade.
Yeah. Oh gosh. You set up the first Bitcoin.
When I was in third grade, my mother got into multi-level marketing.
Shocker.
With a company called Swipe.
I don't remember that.
Which was a blue cleaner, and their slogan was, "I like Swipe." And I asked her, being the precocious lad I was, if I could sell. It was a door-to-door sales gig. And I went door-to-door.
At that age?
At 10 years old.
Wow.
Selling Swipe. I actually made money. I don't remember how much, but I do. When you're 10 years old, you're cute.
Yeah,
and
people are going to buy from you.
These, to me, they looked old. They were probably in their 30s.
Really
these
old people.
These old women in their 30s would go, "Oh, yes, of course I'll buy Swipe from you, little boy." So I forgot I sold Swipe.
So I did the Holly Jolly Berry Company, and then I was a camp counselor.
Wait a minute.
And then I was a janitor.
Did you invent that name, or?
I got to probably be on. It probably was my. So I'll tell you the story. We moved to a house that had a holly tree that was about 9 miles tall, and I think it was my dad's idea.
Okay, how old were you?
I was like 10.
Yeah, it's like a 32-year-old woman looking like
exactly.
a grandma.
And I was going, and so my dad said there'd be a lot of people.
I can't get to the top, Dad.
and my dad said there'd be a lot of people who would love to have sprigs of holly to decorate their homes at the holidays. And I said, yeah, you're right. So he said, why don't you go around the neighborhood, take orders? So I did that. I was like 11.
Did he go out and clip the holly off for you?
We clipped the holly. I then delivered the holly and collected the money.
Did you wrap it up or anything?
Oh, yeah. It wasn't too cute, but it was wrapped up, yeah.
All right.
And we did that, and I did that for a while, and I was a camp counselor. I got paid for that. I was a janitor for a time, and I had my own janitorial business for a time, doing 3 offices when I was a kid.
You are Mr. Entrepreneur,
yeah.
dude.
So I did that. So I've had a number of things. Some have worked and some haven't. I mean, people always say, well, you're very successful. Not always. Not always. There's things I did that didn't work so well.
Therein lies the key to being an entrepreneur. The ability to fail gracefully.
I'd like to think that were true, but I don't know. I mean,
or to fail and get up.
Well, that's
to fall
true.
flat on your face and it be the near end of the world, and get up, dust yourself off, and go, let's try something else.
Yeah.
That didn't work. Let's try this.
I mean, the toughest business I ever had was this business.
The investment business?
No, the radio business.
Oh, this business.
Yeah.
Well, when you owned a station, that's hard.
Oh. Radio,
and plus you were in the beginning of the decline.
Oh, yeah, it was over.
Really, of AM radio.
Oh, yeah.
AM radio is only now having a bit of a renaissance with the decline of FM radio.
Yeah,
FM
I mean, I had an
radio.
AM and an FM, but I mean, it was very tough.
What did you program on the FM?
It was a music format. We had DJs a whole bit. It was crazy. Spending way too much money.
Music formats have got to be getting killed by the Spotifys and the Apple Music and the Pandoras and the satellite radios, and it's just got to be tough to program music in that environment. Yeah. I'd be putting talk on all my FMs if I had them. I just do talk.
Well, I mean, the number one station in our town here, I believe, is on the FM dial, and it is national talk. I mean, NPR, I believe.
Oh, yeah. The public radio.
Yeah.
And there's another area. And again, we're going to run out of hour. Nobody called. It's the holidays. Who cares?
So now you're going to tell a more obscure story?
Well, no, it's interesting how public radio, in an era where they're talking about less funding for public broadcasting, has really done well.
Oh, it's done very well.
Now that they have discovered this, but see, they discovered the right niche. It used to be that public radio was a hodgepodge. And as with your portfolio, and look how I make a segue there, I just tie them together. Like with your portfolio, you need to have a focus. Mm-hmm. Your portfolio needs to have all the pieces need to work together in your portfolio. And public radio used to have, they would play classical music on the weekends.
That's right. Yeah.
They'd play some goofy guy doing a show.
Big band era, et cetera, the whole
whatever.
thing. Yeah.
Now, though, they focused on news and talk. News and
talk.
Really in-depth talk and
Mm-hmm.
really in-depth news and the telling of stories. Though some of my favorite shows are the storytelling shows like Radio Lab and This American Life. That's what radio, by the way, that's what radio used to be.
Mm-hmm, back in the old days, yeah.
And public radio has made it that again. And it's going to be interesting because I honestly believe we're going to start seeing for-profit stations start to take the path of telling stories, of having really compelling hosts who tell a story.
And you see some of it out there now. It's not prevalent because it's caller driven. It's quick. You move on to the next thing, and people are scared that the programmers are scared that people are going to hang out and listen to those stories. They're going to lose interest, etc. But that has not been the case, as you point out, with public radio. They have been willing to stay and listen. So.
Yeah, because their numbers are extraordinary.
Very
numbers
big.
Extraordinary.
Yeah.
So anyway, we have help for you on your portfolio anytime, 24 hours a day, 7 days a week. Please feel free to call us at 855-935-TALK. Just a few other things, a few other educational things you might want to look out for that we do and don't make money. We don't make Real Investing Journal. Do we make money on Real Investing Journal?
I don't know. You know that better than I do.
It's a money loser.
Yeah, okay.
Trust me, it's a money loser. But Real Investing Journal is $25 for 2 years.
Oh, what's the deadline on the article I'm working on?
Like yesterday.
Oh, okay. I got about half of it done. It's pretty good.
Tomorrow.
Pretty good.
I'll give you till tomorrow.
Once I'm done with the egg roll tomorrow, I'll move right to it. Not a problem.
It's not going to take long. They're just going to roll off into the woods.
Okay.
Then they'll be
That's
gone.
True. Find the last
Feed the
year's
foxes.
survivor. Yeah, exactly.
Feed the coyotes, whatever is out there. But Real Investing Journal is one of the things we do. Check it out at realinvestingjournal.com. And please check out my other podcast. It's money30.com.
Tom and Don are talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.